Hello, Mike Swanson here at WallStreetWindow.com. The odds are you are watching this video because you got an email from me about it by being on my email list. Now, if you're not on my email list, you're going to want to get on it. So click the link associated with this video, and then you'll get my updates via email every morning before the market opens. And we're in an interesting time in the financial markets. This month we saw the NASDAQ take a hit. We saw stocks like Apple take an even bigger hit, and stocks like Tesla really get beaten. Tesla fell from 500 all the way down to 325, a big percentage drop. But then last week it bounced, but it didn't really bounce a whole lot. And there's many people that are new to trading. They got into trading for the very first time this year. Millions of Robinhood accounts have been opened up. And a lot of people aren't sure what is going on in the markets or what they should do. And I've been trading these markets now since the 1990s. So I want to give you my 2 cents of advice for what's happening now. And sometimes it's best to simply step back and take a look at the big picture. It's so easy to get caught up in the daily gyrations. And if you're using an app like the Robinhood app, all you see are the daily gyrations. You just see a price up and down from the day before, and it's charts that enable you to put the context of those prices and make some meaning out of them. So take a look at this chart of the S&P 500, and you can see that we've had a tremendous rally since March, and then a bit of a pullback. Last week we fell below the 50-day moving average. That's the blue line on the chart. On Friday it was even down 30 points, but then by the close the S&P 500 closed up almost 2 points. So it held the 50-day moving average, and we're going into this week. We're going to have a Federal Reserve meeting Wednesday, and often there is some sort of gyration, usually a rally, either immediately before that meeting or after that meeting. So I'm expecting this week we'll see some sort of move above the 50-day moving average of some sorts, even if there's a little bit of selling on Monday. So that's a hopeful sign, something that should definitely take place. But if you think about that, though, you even got to put that into context with what is going on here. Look, the S&P 500 has had a tremendous rally. So pullbacks or peaks in many stocks is simply what is going to happen. You're going to get profit taking after giant rallies. And at this point, it's unrealistic to expect that we're going to see the stock market rally from now into the end of the year the same way we saw it do from March. Because for it to do that, it would mean the S&P 500 would basically get to 7,000 in 6 months. It would be the biggest rally in the entire history of the stock market, going all the way back to ever since it was created. I'm talking over 100 years. That's not likely to take place. It's just unrealistic to expect that. So what does this mean? We're in a different market environment than we were from March to the beginning of Labor Day. It just is. So I think the thing to do is to just regroup a little bit. We've taken a hit in the market. Yes, we can bounce, but it's not going to explode like it did since March after this 50-day moving average bounce comes. Some stocks will, of course, do great. Some sectors will do great no matter what happens with the S&P 500. That's what I personally focus on. But there are some stocks that have been big winners since March that probably are not going to continue to be. I would put Tesla at the top of that list. It's just, I think stocks like Tesla that have led on the downside on this recent drop should be sold on a bounce, and that money be best put to use for something else. That means simply buying stocks because a lot of people talk about them, because they're talked about on Twitter or on message boards, isn't the great way to trade these markets, even if I know that's what a lot of Robinhood people have been doing. You need a strategy, you need a system for picking out stocks, and now is sort of a lull in the markets, a pause period. Those are the times when it's best to not overtrade. There's a temptation for people new in the markets, if they see a pullback happen or they see their account balance dip a little bit, to overtrade. I've written that on this piece of paper, do not overtrade, because I needed to remind myself of the most important point I wanted to tell you. Do not overtrade. If you're someone that has had a pullback in your account, it's making you nervous, the thing to do is not to make wild trades to make up for that hit. The thing to do is to pause, to reevaluate the very stocks you own, the very positions you have in your account. There's probably things that should be sold, and that money be best deployed into something else. It's also time to use this as a time to step back, and if you're new to these markets, to take it as a time to learn from what you've done and adapt and adjust. Figure out what are your weak points in navigating these markets, what are potential opportunities that if you can learn about, you can take advantage of. Grab my book, Strategic Stock Trading, as a guide to help you if you don't already have it. So this is an interesting moment. This is going to be an interesting week with the Federal Reserve meeting, and this is a good time to pull back, to adapt, to adjust, and then get ready to re-engage with new stocks, new positions, and improved strategies. So those are my thoughts as we enter this week. And again, subscribe to my email list if you're not on it. If you're someone that's randomly found this on YouTube, then subscribe to my YouTube channel and click the bell associated with this video on the YouTube video, and then YouTube will send you an alert when my next video is up, and I'll be talking with you later.